David, I'll start with you. The way we teased the segment is that we're going to talk about the heart of the sell-off. What do you see as the heart of the sell-off?
So I think that there are a couple of things that are going on here. And I think that the biggest issue that investors need to wrap their head around is that the fundamental safety net, good earnings, good growth, easy monetary policy, which has provided support for markets really for the better part of this expansion, is beginning to fray at the same time that political uncertainty is rising. And so you have kind of this toxic combination where what happens over the next 12 months isn't terribly clear, and risks are undoubtedly tilted to the downside. And that's occurring at the same time as you're seeing, concerns about slower growth in China, the U.S. Numbers out of Europe this morning were disappointing, and I think that confluence of factors has led the market to continue its downward trend here over the past couple of weeks.
Gasoline prices plummeting.
Right.
The consumer is on fire.
Right.
I mean, they clearly have cover to hike next week, don't they?
So I think that in terms of next week, that's basically a foregone conclusion. At this juncture, I think the Fed would do more harm than good by skipping a hike next week. It would undermine their credibility given the language that they've put out there leading up to this meeting.
Kevin, so are we back to this sort of how long can the U.S. decouple from a slowing planet Earth?
Well, yeah, the story this year has been exactly that. The rest of the world has slowed. The United States has really been the star of the show. And ultimately, what we've seen has been the U.S. outperform many other markets around the world. And to really put it in perspective, a year ago, we were projecting relatively low returns for the equity markets given starting valuations. We're still at something like a $30 trillion stock market and a little bit over 15 times multiple. And you've just had a market that's tread water throughout the year, while the consumer here looks relatively good. So we're looking good here in the United States, the rest of the world not so much. And no, we cannot decouple forever.
David, when you look at some of the headlines that are coming out of D.C., investigations around the Trump campaign, you got a new Congress coming to work the beginning of January. Are politics going to become a bigger piece of, or a bigger driver of market action?
I think that politics are probably going to be the driver of market action next year. I think given our outlook for earnings growth kind of coming down from these boomy levels post-tax reform, the fact that fiscal stimulus will have run its course by the middle of next year, the economic story, again, is expected to fade as we work our way through 2019. And so with that occurring, I think you can't ignore politics, but I would say it's not just politics here in the U.S., right? It's also the lack of progress with Brexit, what's going on with Italy. The list is long and distinguished of political risks at this juncture, and I think that that's what's so challenging is if sentiment begins to deteriorate, then we're looking at a market that may actually impact the economy and unravel those fundamentals even further.
Kevin, what happens if the president gets impeached next year?
Oh gosh, well, there's a lot of things that happen. Politics has been would be a big one, and sentiment is another one. It's way too early to begin to speculate about which way this particular cat jumps. But what I would say is that, as the other guest pointed out, sentiment really is key because we've had very good sentiment here in the United States driving investment, which in turn has helped to keep profits moving, and the tax cuts that were put in place have been a big impetus to higher expected profitability and a higher stock market. So ultimately, we're thinking that fiscal policy remains relatively expansionary, but anything that would upset that or create uncertainty there could be something that the market would have to take some time to digest. And I guess the first reaction would be to sell the news and then figure it out later.
I don't know. I combed through a lot of trading notes in the morning. You'd be hard-pressed to find anything of substance about a shutdown or Michael Cohen. And that extends to today.
Yeah, exactly. And I think that, what the market is focusing on right now are those things that can actually disrupt the economic story. It's things like Brexit really deteriorating the situation in the UK, Italy seeing further debt growth and that weighing on, what's already a sluggish pace of growth in that part of the world. I think that, the PMIs this morning certainly didn't help when we think about the broader narrative. Yes, you saw manufacturing output tick slightly higher in the Eurozone. Yes, there are some temporary things going on in terms of river levels and auto production. But, all eyes seem to be on those big headline political issues that really can have an underlying impact on the trajectory of growth.
Bottom line, are you trimming S&P numbers for next year?
So we aren't trimming our S&P numbers for next year quite yet. My personal view is that next year is going to be a year of high volatility, kind of similar to what we've seen in the back half of this year. There's going to be room to make money, but you're going to have to be very tactical and trade this market. for the year as a whole, I think mid-single digits is a reasonable expectation.
Kevin, I put the same question to you. How should investors be positioned going into what seems to be a very uncertain 2019?
Yeah, I think you got to be cautious. We've got a barometer that we use to judge the bull case, bear case. I'd say that the consensus view is for a 17% average increase in S&P 500 stocks. That would put you at 3,100 on the S&P. To us, that seems like a stretch given what we're seeing with market sentiment and global conditions. So we're going to take the 5% to 6% type route until we see something turn one way or the other. Right now, we're fairly neutral in terms of our allocations.